there is a titanic battle going on in this market that you may not be aware of. It barely gets any attention. Call it the war between the individual investor and the institutional investor. I think it actually might hold the key to where this market's going, even with this today. Dow declined 166 points. S&P dipped 0.07%. NASDAQ inched up 0.03%. Lots of people have been wondering how the heck this market can keep going up in response to a wave of horrendously negative news involving tariffs and trade, as well as an obvious slowdown in demand for all sorts of goods and services. They think the market's irrational because it should be going down, not up. And it never should have been able to recover so swiftly after the tsunami of selling that hit us after Liberation Day. It should have been a bear market. But it's not like people aren't selling at all. Bank of America's research department puts out this amazing report entitled Equity Client Flow Trends. It gives you a snapshot of what's going on with different kinds of investors within their organization, the institutions, the companies themselves in the form of buybacks, the private clients, that's the individuals that I think are in there buying. Under the title, Big Equity Outflows Led by Institutions and Hedge Funds, this piece of research says that we had just had the biggest week of selling in almost a year. Yep, the S&P's up 1.7%, hitting new all-time highs. And what's going on? The sixth largest outflows week in history, meaning since B of A started keeping this data in 2008. I got to tell you, that's incredible, people. According to the report, this selling was led by institutional clients, the big guys. In fact, the institutions have been net sellers in 8 of the last 9 weeks. Meanwhile, corporate client buybacks slowed to the lowest weekly level since October 2023. No hope there.
Don't miss a second of Mad Money. Follow @Jim Cramer on X. Have a question? Tweet Cramer. #MadMentions. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.